Good morning, everyone. Welcome to our AP recovery, profit recovery and beyond webinar. This is an opportunity for us to engage with you guys about our new partner. And you won't be able to see him because he's having technical difficulties in terms of his camera. But I do have Chris joining me on the webinar today, so we'll find out a bit more Chris in a minute. As we go through, like I said, we'll introduce what we're doing today. So my name is Jack. I'm the sales director at YourDMS, and as I said, we are delighted to be joined by Chris Wu, Chief Product Officer of Westgate Moore Associates. So Chris, I know we can't see you, but good morning. How are you?
Good morning, Jack. How are we doing?
Yeah, good. Thank you, mate. So just a little bit of housekeeping before we start. I know we've got a few people just dripping in now, so we will just, I'm just having a look at that. Yeah, so just a bit of housekeeping before we get started. If you have any questions during the presentation, you can watch this on catch up as well. So if you do have any questions, there will be our email available to you. Please type them in the questions box, and Sadie, our marketing manager at YourDMS, is monitoring that. And it's just in the control panel. You should be able to see it quite nicely, and we'll be monitoring them all the way through, and then answering any questions at the end. So what we're going to do is just tell you a bit more about YourDMS. So as I said, my name is Jack and I am the sales director at YourDMS. It is my family run business, and we are based in Swindon, so in Wiltshire, outskirts of Cotswolds, if anyone's been to the lovely Cotswolds. We help all kinds of businesses improve the way they work with documents and data by using technology. So we've been going for 15 years, and we have all different types of businesses across the UK, and we help them all the way from consultancy, so finding the problem, to delivery. So we have experts on site that will deliver a solution for them, to the support and become trusted advisors. So quite frequently we become trusted advisors to our customers of 15 years and longer, that they might just need some advice. And we partner with an ecosystem of technology partners such as Westgate Moore, which we're going to hear more from today, across the world, which allows us to provide the right solution for the right organization. It means we can just get involved with pretty much any sort of problem that people may have. So that's a bit about us. Chris, I'm going to bring you in now, mate. So can you tell us a little bit about yourself, and also Westgate Moore, please?
Brilliant. Hi everyone, good morning. Jack, again, thanks for having me, mate.
No problem.
Really good to be here. So yeah, I mean, obviously, we've just partnered up, working with quite a few accounts payable functions at the minute, which is great. But a little bit about me, a little bit about Westgate Moore. So we're actually just entering our 18th year. So I think we're a little bit older than yourself, Jack, probably about 3 years. Won't hold that against you. But yeah, so we were founded in 2004. We're actually one of the pioneers in the recovery audit space. You know, if you guys aren't sure what recovery audit is, just bear with me. We'll come to that shortly. But we've worked alongside, you know, hundreds of AP functions of all shapes and sizes, big, small, medium size, and we've recovered in the process tens of millions of pounds in what actually had been erroneous payments made to their suppliers. So that's sort of where we were today. We're sort of focusing on protecting the working capital in accounts payable. So we're still conducting our recovery audits as well. But we've actually recently, in the past couple of years, launched a new product called Autorex, which automates the supplier statement reconciliation process. So when we're talking about the recovery audit, in a few slides' time, we'll touch on the basis that actually a lot of what we find in the recovery audits can actually be found and prevented from conducting statement recs.
Fantastic. So yeah, as you quite rightly alluded to, this is the profit recovery audit, and instead of just using that word audit, because people seem to run a mile when they say audit, and we'll go on to a bit about that later on. But yeah, the profit recovery is what people like I think, more of a positive spin on it. And obviously, as everyone will see, the title of the webinar being this, like finding £50 or £20 down the back of your sofa type is going to be quite relevant going through. So yeah, please interact, and there's going to be some great detail from Chris as we go through. So Chris, let's move on then, and this is a perfect way to start. Let's talk about what is an AP profit recovery. What is it? How does it work, etc.
Cool. Okay. So I mean, it's profit recovery, audit recovery, recovery audit, duplicate payment prevention, duplicate payment checks, those sort of things. Those are the sort of terms that you might have heard. But ultimately, what it is a review of historical transactions that have been made in accounts payable. So we will audit every single 100% of all transactions made in AP over a 6-year period in order to find erroneous payments. So these might be duplicate payments. These might be payments that have been made to the wrong supplier, overpayments, things like that. I mean, again, I'll talk more about what we actually find, but ultimately, it's a periodic review that highlights and locates any sort of payment discrepancies that may have happened historically. It's quite a big thing for us. It's, as you can see, probably on the last point on the slide, your financial statements are audited biannually, but payment runs must also be audited as well. It's always nice when we're dealing with prospects and clients to actually say, well, actually, it's a no-brainer, and ultimately, it's a free service that reviews historical transactions, and ultimately, it's profit that we find and recover.
Yeah. And I hope that piques people's interest, because as you said, it's a free service, you know, and again, we'll touch on that as we go through. But and the other thing that would pique my interest as a business owner, operations type personnel in an organization, and also finance directors alike, that it's profit recovery. So again, it's a recovery of transactions that you won't have known that you've necessarily done, right? So or missed out on. So it's definitely a positive spin, because if you don't find anything, you're doing something great, you know.
Well, yeah, I mean, it's always good, you know. It's almost like a third-party health check, you know. Yeah. So it's a case of, we'll go in there, we don't find anything. But for those clients that we don't find anything with, it's, you know, your rubber stamp that you've got an ISO 27001 accredited, approved organisation who's been trading for 18 years. You know, it's a rubber stamp that your processes and the procedures that you've got within your AP are great. Flip side, we come in and we find you know, thousands of transactions that have been paid erroneously. Yeah. Ultimately, it's the transactions that you don't know that have been made. Yeah,
and again, to put it in, I suppose, my simple head, because I don't know a lot about it from the audit perspective. That's why we're partnering with you guys, and it must be like finding a bit 20 quid or £5 that you didn't know you fell out your wallet or whatever, or fell out your pocket. So it is that kind of thing that you didn't mean to do it. It's not a, you just shoved it down your sofa type thing. So you find it's a nice surprise, isn't it?
You know, it's just another control and another method, let's say, that can be utilised in accounts payable. You know, especially now, given the fact that we did have 2 years of home working. You know, it was a massive seismic shift, a massive seismic change for accounts payable. You know, from a department that was, you know, historically chained to your desk with mounds and mounds and mounds and reels and reels and reels of paper. All of a sudden, to be told that you're not allowed in the office anymore. You know, it's any sort of disruption with accounts payable will always lead to some sort of error in terms of the breakdown of processes, and those errors are ultimately payment errors.
Yeah, and you got kids, I've got kids, and I'm not being funny. If I was sat at home keying in invoices or doing month end or whatever, I would have definitely made a mistake with my kid banging on the office door at home. Definitely. because you're just not necessarily focused. You know, it's not your fault. It was just like you said, the way of the world and the situation that the cards that people were dealt. So let's move on then. So this is a kind of just like a sort of a flow chart that where we whether flow chart's the right word or whatever, but just to show how even the best AP teams could be missing out quite serious sums of money. And there's some huge stats in here. So Chris, do you want to just talk us through this diagram?
Yeah, absolutely. So we've kind of focused on the larger organisation here. So you've got an annual spend of £800 million, and we regularly speak with finance directors, CFOs, and say, yeah, well, it's only a few transactions that might go, you know, through. It doesn't matter, you know, we're not interested type thing. However, when you put it into some sort of numerical example, okay, it's only, let's say it's one in 1,000, two in 1,000 transactions, 0.02% inaccuracy rate. Okay, but actually 0.02% of £800 million is actually £160,000. And if we're going back sort of 5-6 years, all of a sudden that's, you know, that's upwards of half a £1 million recovery.
Yeah, that's staggering. That really is staggering.
But if you flip it, mate, I think like we've spoken before,
yeah,
it's minute, but that minute can actually result in quite large. And then all of a sudden the CFO is thinking, oh, well, what's going on here? Someone's doing something wrong. Well, actually, mate, if you flip it, you're actually processing your invoices 99.98% accurate.
Yeah. So, and how many software or software providers or third-party companies will come in and go, you need to transform this because you're not doing it right, or whatever it may be, when actually with the facts, and it's quite a small amount, because ultimately if a profit recovery audit, straight away, it's human nature, we'll go for, oh, it's going to be loads, we're going to have so much work to do after. And actually some people might turn around and go, well, actually, if it's going to give me that much work after, I'm not going to be bothered. You know, I don't want to know type thing. I want to just close my eyes. But actually, what you could look at it, I've said actually a lot in that sentence. But if you look at it on the grand scheme of things, you're going to be improving your processes over time. So it might be a lot of oh, closing my eyes moment type thing. But with that 0.02%. that you've come in terms of said, well, actually, there's only 0.02 incorrect rate of invoices process, means that it's really small amount. Yeah. From what the customers. Yeah, absolutely. Exactly. Absolutely. Any other points you want to raise on there, mate?
I think we can cover it on the next slide, to be honest.
Yeah. Good stuff. All right, let's move on then. So why do payment errors occur? So obviously we've spoken about the audit, we've given some facts, roughly how many invoices people are processing or AP departments are processing. So can you give us some insights, and there are some points there for people to see, but just elaborate on a few of those if you will. I mean, I think we've elaborated on the dreaded word COVID, being people at home, but if you could just have a look at, just give us some insight of why payment errors might occur just in the first place, really.
Yeah, of course. I mean, it's kind of, I think let's not forget COVID too much, because COVID is the reason why there are actually payment errors more so these days than there were before. But ultimately, it's the vast majority of the errors that we find are duplicate invoices. So this is where let's take a large NHS or a large organisation which has various departments. An invoice will come in, the invoice might get sent to the wrong department, and then your suppliers are ringing in saying, have you got the invoice and are you going to pay it? And it's actually, well, no, we haven't got a copy of that. We haven't got a copy of that invoice. Can you send us a copy? Okay. So then they'll send another copy in. 2 weeks later, that original invoice will make its way through the internal posting system, or it'll be found in the junk or the spam of an inbox, and then that'll get processed as well. Okay, so that's stage one. Stage two would be some sort of breakdown in terms of the input of that said invoice. So invoice 12345 might get entered by yourself, Jack.
Yep.
I come along and I might enter that invoice as 1234S or I2345. So straight away, that's bypassed the internal controls of any ERP.
Yeah.
And without even flagging that this is potentially duplicate, because it's two separate, completely different invoice numbers, hence a duplicate payment from a duplicate invoice. Really, really, it's probably, I'm not doing myself out of a job here, but it's more, that sort of example was more prevalent sort of 10, 15 years ago, before the onset of, the advent of OCR and things like that. But still, OCR it's still not accurate. It's still not 100% accurate.
No, we see it in our world, definitely. Obviously, the services which will come on later, which what from the beyond part on this, the title of the webinar is the OCR part and how you can reduce those. But I think when people talk about duplicate invoices, people think that they're just putting things on twice, as in the same invoice number on, and then straight away they go, oh, my ERP system can handle that. Well, actually, when the examples you've given us there, where a 5 could be an S, and the same in a transformation in a digital world, that could be the same thing, and there only is so much controls and balances you can actually put in place, and you can reduce it. But no, that's important, because again, my mind would go straight away going, well, the ERP would stop that, but it's important to know the fact that a 5 could be an S in some cases, or not even a 5, it could be anything, like you said. Just a good example on that one. Any other points on there, mate?
Yeah, absolutely. It's like, I think it's like you touched on a second ago, Jack. It's you might get distracted. Your kids might come in your room, and all of a sudden you're entering an invoice number in, and all of a sudden someone's like, "Can I have your phone, Dad?" And all of a sudden your head switches, and all of a sudden you're putting your mobile phone number in as the invoice number. Sounds ludicrous. We've seen it. Putting the invoice date in, putting your date of birth in. Obviously we're talking here about the manual process in accounts payable, but it's important to touch on that. But then
no, definitely. I mean, I've written what I've been speaking about in real life and wrote on a text message just because my mind's not thinking right. So it happens. It's what we call real world. And even in an automation way, you can't automate everything. You could be entering a nominal code. You could be entering anything. You have pre-populated bits of data and stuff like that, but it still happens. Even if it's on the computer, it still happens.
Yeah, absolutely. But so let's move away from the manual process and let's go on to the automation. So an invoice has been scanned in, invoice has been entered into the system. Your ERP picks up that it's a duplicate, but you've got 500 to 600 invoices to sort of approve. Don't matter. Just click accept on the duplicate invoice.
Yep.
We've worked with, I don't care to disclose really, but a lot of organizations where we find that duplicate invoice numbers are entered onto systems which shouldn't happen. But because of the duplicate prevention is able to be bypassed, it happens, which is not good really. So that's
scary. Scary that when it's an option, do you want to put this duplicate invoice on? It's like, yes. It's like, okay. It's crazy.
Yeah, I mean, so just to touch on some other ones as well. Obviously, with sort of COVID, we had duplicate invoices before, but now you've got suppliers emailing it in, posting it in, sending a courier, sending it by fax, sending by carrier pigeon. They just want to get paid.
Yeah.
So I think it's about a 60% increase what we found for the past 2 years on sort of on the average sort of what we find in sort of duplicates and erroneous payments.
Especially if the business is so busy that they can't pay that supplier, and like you said, the supplier just wants to be paid, so they're going to be sending in whatever means necessary. And yourself, you call, you send an email. If you've got their number, you might send them a text, just to see what platform you can get older people on. It's the same with an invoice. An email now. We all know that 99.9% of invoices now will come through an email. You get very few now via post, and COVID has had a massive push with that. But there will be some that just revert back to it just because that's what they like and they know. But you're absolutely right. If you're so busy that say you're going over to I don't know, paying people in 40 days rather than your standard 30 days or within your agreed payment times. And yeah, the suppliers are going to be pestering and sending more and more invoices in. And yeah, I can definitely see where those errors would occur from that perspective.
Cool.
Right, so we move on then. So obviously we just spoke about why they would occur. So let's talk about then now what you can find. I mean, obviously that's going to be fairly obvious from what you can, how they can occur. But let's talk about what the profit or audit recovery can uncover.
Cool. So obviously we would receive sort of 6 years of transactions, and we'll plug that through our bespoke software, and we'll get a whole host of different reports based on different algorithms and whatnot. And ultimately, the data that we collect and the data that we review is there to find the duplicate payments. We are now able to find actually payments that have been made to the wrong supplier using some form of algorithms as well. So this might be where you have, I don't know, let's say Joe Blogs Limited, supply code 001. You've got Jack Blogs Limited, supply code 0100. Again, it might just be posted to the wrong account, and you've paid someone in error, and then you'll pay the other invoice as well. Let's say if there's a duplicate invoice in the system. Overpayments. I'm sure everyone on the webinar today would have come across this, where you might have put the decimal point in the wrong spot. You might add an extra zero. You might add 2 extra zeros. It happens, and then you miss posting. So this is quite a common occurrence. Is where you'll receive a nice credit note from your supplier, but unfortunately it's been posted as an invoice, so you've actually double overpaid.
I suppose with just touch on overpayments for a minute, just in terms of line item information. So if businesses are keeping stock, we found it certainly with rounding issues and stuff. So certainly in the construction industry, you could be buying in fuel, you could be buying in concrete, and that doesn't necessarily have a quantity, if you like. So you'll just order something, but you actually might have the container might be a quarter full, so then they're only topping that up. So there's loads of rounding issues. I'm sure did that flag up from the overpayments perspective?
Of course, yeah. Of course, absolutely.
Yeah.
Oh yeah, I think with the missed postings, it's especially when suppliers can be quite lazy, and they'll send you a credit note, but at the top of the credit note it says invoice.
Yes. Yes.
So that doesn't help.
Nope.
And then another one is part of what we found as well. It's when I touched on at the start about the lack of reconciliation of supplier statements. As part of the audit, we actually utilise our automated solution, AutoRex, and we send out a circularisation to every single supplier, and we find age credit notes that have been sat there 5, 6 years. Your suppliers are all too keen to jump on the phone and jump on the email and say, are you going to pay this invoice? But we're not going to tell you actually that you've got a £4,000 credit with us, so can you still pay your £8,000, please? I think one of the worst cases that we found is probably about 4 or 5 years ago. We found a £147,000 credit note on a supplier statement, which had been sat there, not claimed. Yeah.
Good one to find though, and interesting with credit notes. Even we talk manual and automation, whatever process, whatever journey people are on, and wherever they're at this current day, doesn't matter. Even an automated process wouldn't pick up a credit note that says invoice on the top.
Nope.
So it's just how it is on that one. It needs to have those words on it, otherwise no one knows what it is.
Yeah, exactly. And just another one is deposits. So you may have paid a deposit for an order, and then the invoice comes in, and you'll pay the whole amount again without realising that you paid the deposit. So a lot of what we find is from the algorithms and the software that we've got as part of the duplicate payment review, audit recovery. But a vast majority can be found by simply just reconciling a few supply statements yourself.
Yeah.
I'm putting myself again at this service here, but it really is, it's part of sort of best practice to reconcile as many supply statements as you can.
Yeah. But that in itself is a challenge for most AP departments, because they are dealing with all this as well as reconciling, as we know, talking to businesses ourselves, between me and you, we've found that they try to get round to doing it. They do some, maybe 20, 30, 40, 50%, but they'd want to do more, and I suppose that's exactly where we all come in to really help and, well, get the magnifying glass out and go, okay, so what can we help with here? So cool. Okay, let's talk about the report then, because this is everyone's. I think this is obviously the audit, etc., but it's how it's presented, I think, and everyone loves the information down. Obviously, I mean, you didn't necessarily touch on just back then. I forgot to pick it up on it actually, but businesses sign an NDA, don't they? So you hand over 6 years of their data, but they sign an NDA. So that's all sorted on that side.
Yeah, of course.
Yeah. So that's all secure and everything like that. That's all done before. So then the report and the level of detail that goes into it. So there is a sample of the report in the handout section. So you should see that. And there are some other handouts in there that we will come on to, but there's some freebies. Take it, because nothing's free nowadays, as I said, keep saying before. But please take them. This is an example report, so don't worry, we're not using anyone's data or anything like that. So yeah, so that you can download them, look more closely, but this is just obviously a little infographic on there. But just talk about the report, Chris, and yeah, just briefly.
Yeah, of course. So it's a case of, we engage with clients, we engage with prospects, we conduct a successful profit recovery audit. We might have recovered sort of £250,000 upwards. Okay, brilliant. Thank you. We'll see you again in 4 or 5 years' time, and we'll do the same again. It helps us, but it doesn't help our clients. So what we try and do is actually we highlight for the recovery schedule all of the types of different erroneous payments we find, and then we categorise those into subsections. So it might be duplicate invoices. It might be payments to wrong suppliers. It might be that you've got multiple records of one of the same supplier, and hence that's led to multiple payments of one invoice to the same supplier. And we categorise those in the report, and we offer a sort of best practice solution on how not to make those payment errors again in the future.
Massive, yeah, massively important that, and I think that's taken, here you go, like you said, see you in 5 years' time when you make the same mistakes again. I'm not going to tell you what it is, to, well, we're going to do the consultancy part as well and put in best practices and see where you can improve on. Whether they decide to do that as a business is up to them, obviously, and what areas they want to improve on first, I think, is also important, because the realization of trying to do it all at once is also unrealistic. It really is. That tends to where businesses fail in transformation or just slight process changes. Forget digital for a minute. It kind of is where businesses fail trying to do everything at once, and workload, real life, just doesn't allow us to do that. Anything else on the report? Should we just scoot on to the pushbacks and benefits?
Yeah, I mean, it's just sort of closing remark on the report is just that the reason why we partner with organisations such as yourself, it's more often than not, it is called a process improvement report. So the reason why there are breakdowns in your processes and leads to duplicate payments, erroneous payments, is because of that. It's because of a breakdown in your processes. So what can we do, or what can our partners do? So more often than not, it's improving your prevention tools within your ERPs, it's automating your supply statements, it's taking advantage of preventative software that's out there. So that's the reason why partnering with people like yourself, Jack, to sort of help add value to our audits.
Yeah, absolutely. No, and I think, again, that's important, because they might already have that stuff in place and they don't know about it as well. So there's also your highlighting stuff, and like you said, this is where we started sitting down and going, actually, after the report, where do we go from there? You've said with the auto recs but actually is there other document management, invoice processing, expense management, general consultancy going forward of how the best practices, etc., that this is going to give businesses going forward, I think is very powerful. So no, definitely with you on that one. So we we both looked at these slides and thought this would be really should touch base with a lot of people who's watching this either live or on demand, but it's the pushback / and benefit. So we've got a couple of speech bubbles in terms of what a business would say, or what we hear typically, what people say, actually no, we don't need an audit or don't want an audit, to then what we would say. So Chris, we'll just talk between ourselves on this one. So the first one is so I'm nervous about what the report will find, and we discussed this, didn't we, at the off the webinar, and also just touched on it at the very first slide. But it's very much like everyone's going to be nervous, aren't they? They're going to be nervous, but they've got to take it as, okay, but this is the line in the sand.
Yeah. I mean, so more often than not, it's the directors of finances and financial controllers who will sign off on this project. Yeah. And accounts payable clerks and employees might think that actually we're out to find something that they've done wrong. It's not that, it's not that at all. Like we said, 99.98% of your transactions that you're processing are correctly. So it's might be human error. It could be, a system error, which has led to it. So we're not there to sort of highlight the bad work that anyone's doing. It's such a small number of transactions in the grand scheme of things.
Yeah, definitely, and I think that's important. Like as we said, to really open people's eyes with this. I'm massive into the mental health side, as you know, and as everybody that knows me knows that I'm looking to ways improving companies, employees' mental health, right the way from the top to the people that are keying in the invoices or whatever it may be, decision makers, etc. But it's very much like everyone's involved in this process, and it's about how you portray why you're doing this stuff. So why are we doing the audit, and I think that definitely should come from the decision makers, and also working with third parties like us, and yourselves, in the sense of just look, it's fine, it's 0.02%, so you're not talking about massive amounts, and I think it's how it portrays, right?
Yeah, absolutely.
So the next one is I mean, probably get this a lot, right? We're really thorough, and I don't think you'll find anything. So what would you say to that, mate?
Politely, we've never conducted an audit where we didn't find anything. You're on average, if you're processing between, maybe upwards of 2,000 invoices a month, then for every of those 2,000 invoices, you're processing a couple incorrectly. It's guaranteed. I think from the negative perspective, KPMG conducted a review. I think it's one of the early slides actually, a few years ago. 5% of all businesses' transactions each year are fraudulent. And these sort of transactions that we're talking about falls under that fraud bracket. So we will find things. If we don't find anything, just to sort of back my claim up, it's a free solution. There's absolutely zero cost, risk free, and it's only going to benefit everyone.
Yeah, definitely. And like you said, if you don't find anything, they're doing something right. But the guarantee is you will at least 1, 2. Do you know what I mean? And you're going back 6 years. So it's that. So okay. And we've definitely touched on this, but I think my ERP system already checks for this. What do you say to that?
Brilliant. I'm glad it does. However, like we alluded to before, where you might have a duplicate invoice in the processes, and your OCR's picked up an I as an L, or vice versa, it's going to bypass those checks. And again, like we alluded to before, you might have those checks in place, but you might have to bypass or the ability to bypass that check. So yeah, again,
and something the maybe the people we're talking to, either the finance director, finance controller, finance manager, don't know about, you know, because we've been on calls that they didn't know that, and the accounts clerk's just gone. He's turned around and gone, oh yeah, no, definitely, we can just bypass it. And the AP manager's like, what? So it's like, you might not know, you know, that you can bypass, and it's been happening, you know. And even if you are in the digital world and you've moved over to the OCR world, or whatever that may be, invoice processing, you've got to look back and go, well, when did you implement it? Was it last year? And then you've got 5 years to look back on, right? So it's that kind of, and as we said, OCR isn't always 100% accurate with picking up these issues, and especially if your ERP can still accept duplicate invoices.
I think just one more thing before we move on to the next one, Jack. It's a case of, yes, your ERP is great, which is great. Yes, it's got duplicate checks which can't be bypassed. Okay, brilliant. But actually, the transactions that we find in the actual data itself is only it's a major part, but it's only one part of the audit. Second part is the circularization process. So it's a case of, do you reconcile statements? Well, yeah, we kind of probably reconcile maybe the top 50. How many active suppliers have you got? Okay, maybe about 2,000. Well, how many inactive suppliers have you got? We've got about 5,000 inactive suppliers. Okay, so when's the last time any of those statements are audited? Well, they don't. Well, so how do you know that there aren't any deposits on there? You don't. Okay, so you know, it's great that there's ERP, you know, checks in place, but again, it's only one part of the audit.
Interesting. No, I like that. No, that's really good. Okay, if you do find some errors, how do we stop them? As you've alluded to with the report, but what do you say to that?
Yeah, it's everything's in the process improvement report. So again, being around for sort of, you know, going into our 18th year, we've come across pretty much, you know, there isn't one, I don't think, type of erroneous payment out there that we haven't come across. We've got best practice how to prevent those, or you know, how to sort of try and limit any errors happening in the future. Whether that, you know, more often than not, it comes down to training, and it really does sound simple, but it's a case of, if you have an invoice that's clearly at the top says copy or duplicate, just have some attention to detail. Just take your time and just check that invoice isn't in there already.
And there might be a question on this from one of the people in the audience, but I suppose, would you recommend everyone being involved in the department?
In what way?
In terms of the audit and sending the report out, or is it very much you're dealing with financial director and they are then funneling them down and working with the team? How's the approach on that from your side?
A couple really. Historically, these sort of audits have always been sort of pushed back. You know, we're going back to when you've got corridors and corridors of paper invoices and folders. There's a sort of a misconception that these sort of audits take up too much time. That, you know, they're very intrusive. You need lots of work. So nowadays, it could be further from the truth. So to answer that question, it's a case of, we'll just engage with the accounts payable manager to begin with. Obviously, we'll get sign off from above, but we want to work with that AP manager to help their team improve. So it's a case of, when we do the process improvement report, we'll sit down with the AP manager and the directors to go through that. And if there is any training that needs, then, you know, we partner with the Accounts Payable Association, so we often sort of direct them their way to offer some training as well. So it's a case of, we'll sit down with like I said, with the managers first, and then if there is any training or any sort of further action needed, then we'll work with the whole team. But we try and stay very much in the background as possible as we can.
Yeah, and that's a good point. We're both members of the Accounts Payable Association, and the training they offer is top class with that. And yeah, so you're, even if the digital transformation and everything that's happened, if it is training, like you said, we've got partners as well we partner with the association that can help them with that. So no, that's important. Okay, let's get on to the beyond part. So thanks for that, mate. So what happens after your audit and how we can help? So essentially, we're looking at, so we've discussed, you get the detailed report of the findings, which then I think leaks in, maybe you agree or don't, Chris, but in terms of the consultancy element of it, because you said you break it down into touch points about going forward. So I think that kind of gives you then a plan of action, if you like, to move forward with whatever that may be. And as we had discussed, the reason why YourDMS and Westgate Moore are partnering together, because from an audit and AutoRex perspective, Westgate Moore got you covered going forward in terms of the document management side, general processes, business processes, whether that is you already have systems in place and you just don't know how to integrate them together, or you don't have that functionality internally, or whatever it may be. Integrate with ERP, invoice processing, expense management, anything like that that YourDMS then can help you going forward. And it just then starts as a conversation, you know, and we'll get on to how you book your audit, etc., in the next slide. But I think it's important to know that we always advise, go and get your audit done with Chris and the team. And me and Chris, from a processing perspective, will be working together to, if there's anything we can help with, then we've got you from that beyond, and then you become trusted advisors from both companies going forward. And again, part of the Accounts Payable Association, so you can have some training and blah blah blah. So I think it's really important that especially you're not just left, like you said, hung out to dry after the report, and you just get, I mean, how big are typically the reports, Chris?
Or
does it vary?
Yeah, it's about 5-6 pages long. So we obviously classify all of the results that we find, all the claims that we find, and then depending on the length and the number of transactions we find, you know, it's not a huge document, 5 or 6 pages, but it's, you know, it's straight to the point. It's all bullet pointed, easily. Well, you have to see yourself if you download it in the handout section.
Yes, yes, absolutely, yeah.
But yeah, it's just to try and reiterate the fact that it's a case of, we come in and we don't just say, thanks, we'll have your money and we'll see you again in 4 years' time. We actually try and work with you to sort of prevent any of these sort of erroneous payments happening again.
It's a word that's been around for years and still will be. It's all about relationships. It's all about building a relationship with businesses, customers, partners. It's all about that relationship, and that's what YourDMS have been built on for 15 years, and the same with you guys for 18. So it's definitely something that businesses will have good knowledge, or it'll be in their head that they can work with us for many years to come. So thank you for today. We are going to go to Sadie, so hopefully Sadie come on. But it's been, for any questions, that is, sorry. So Sadie, are there any questions for me or Chris?
Yes, we do have some questions.
Brace yourself, Chris.
How much does the audit cost and how long will it take?
So the audit, it's actually free. I think I mentioned earlier, there's absolutely no upfront cost. So everything's contingency based. So any of our fees come as a percentage of anything that we recover. And just to let you know, there's no recovery. There really is no fee. How long does it take? Typically from sort of contract sign off and exchanging NDAs and whatnot, we can have an accurate potential recovery schedule within about 2 or 3 days of receiving the data, and then it's a case of just validating it in your systems, and then we actually do the recoveries for you as well. So then it's over to your to your relationships with your suppliers. So typically, 4 to 6 weeks, we can start seeing some recovery, if not complete recovery. There's always a few odds and sods which will take a while to come in, but that's just because your suppliers don't want to pay you back the money. But yeah, 4 to 6 weeks, and we can have a good audit.
Good stuff. Anything else, Eddie?
Yeah. Someone has asked, is the audit done on site or off site?
Entirely up to you guys. Like I said, in the old, showing my age, in the olden days, it was very, very manual, very, very on site, because of the corridors of our store cupboards with paper invoices. But now, and thank COVID for this. In a way, it's all the audits are remote that we conduct these days. So entirely up to you guys.
Okay. Someone's also asked, how do you get hold of our data?
Brilliant, good question. So we will liaise with your IT team directly. So actually, just to drop that one out there, in March of this year, we actually received our ISO 27001 accreditation, which is a world-known, world-respected accreditation for data management and data security. So your IT teams can be sleep easy that we are very secure in terms of our data transfer. So like I said, we'll liaise directly with your IT team, and we'll receive the data securely.
Okay. Someone else has asked, is there a risk we could damage our supplier relationships because we're basically asking for money back?
No, I don't think so. Ultimately, it's your suppliers who want to have a good relationship with yourselves, because ultimately they want to be benefiting from their sales. And the second part of the question about actually giving money back. So with active suppliers, we'd actually tend not to ask for any transfers of money. It actually benefits both ourselves and both our clients. The fact that we'll get written permission via email that a credit note can be received to offset any overpayment. That way the recovery is instant, and that way there's no mess around of waiting for their payment run on their side. Just delays things.
Okay, we have one more question. Can we have an audit done if we're going through a merger?
Absolutely. So we would always advise, if you are going through a merger, or in fact if you're going to go to migrate to any new systems, any massive change that's going to take place in an accounts payable function, an audit should be done prior to a merger and post-merger.
Good stuff. That was it, Sadie, yeah?
Yep, that was all of our questions.
Amazing. Some good questions there. So anything you want to add on there, Chris, at all? Or should we wrap up?
Just, it's just to sort of try and reiterate the point that it is zero cost, it is risk-free.
Yeah.
It's a case of, we come across it, a lot that, oh, we haven't got the time, or it's like the bullet points earlier. You're not going to find anything. Okay, well, let's have a look.
Yeah.
You don't think any errors have been made, because the errors that we find are errors that you don't realise have been made.
Yeah.
So it's a case of just, we always advise as part of best practice, and like I said at the start, you have your annual accounts reviewed, biannually, and payment runs need to be audited as well.
Yeah, absolutely. No, it's certainly it's a great topic. As I said, I'm so happy that we're partnering with you. I think there's businesses. The businesses are, in my opinion, crazy if they don't take the audit up, because I think it's a really good starting point for any accounts payable and department and business to kickstart whatever journey they want to go on, whether that's digital transformation or a slight process change. I think this really does help them. Plus the fact is it's cash that they are entitled to, or do you know what I mean? It's that type of scenario. So I think if people try and turn the negatives in their head into a positive, then they will definitely see the benefit of that. But on the page here, so this is how you book your audit. So it's very much, if you want to ask more questions, there's my email on there, there's Chris's email on there. We can jump on a call, any of us. If you want to, I know Sadie's put the our LinkedIn details in the chat, so please feel free to connect with us. We share some good content on there, and we're always happy to have an initial conversation rather than just say, just give me a data and that's it, let's run with the audit. It's always answering your questions first and foremost, and then, yeah, as I said, then we can talk about the beyond part. Chris, anything to add? It's been, like I said, I thank you for your time today. I think it's been definitely beneficial for the people watching live, and also people can get a copy of this after the webinar itself, and it will go up on our YouTube and all on our social media pages. But yeah, no, I've really enjoyed it, mate. So thank you for that.
Me too. No, absolute pleasure. Thank you for having me.
No problem at all. So yeah, and thank you, Sadie, for monitoring the questions. A gem as always. So that's it, guys. Enjoy the rest of your day. Enjoy the sunshine. Drink lots of water. And we will hope to hear from you all soon.
Cheers, guys. Cheers, Jack. Thanks, Sadie.
Good, mate.